Hi, I'm Bert Nussbaumer from macrobeat.co.uk. It seems we have entered part two of the summer market, where usually part one is where we can see the directional markets, big breakouts as we have seen in the dollar due to sort of thin market conditions. Part two is usually when the sort of trend gets to the end. We have obviously the people that have missed the moves that try to get back on board. We have those that were on the move that are going to square up. So I think this could last just a few weeks into end of August, and I don't really expect any directional things to happen. I don't really want to dig around into the economics too much. Obviously, we had the presidential hopeful Biden nominate Kamala Harris as his running mate, which obviously have scored him a few points, but the market isn't really yet too focused on that. That's going to be more September as well. We have a gridlock in the talks between the Republicans and the Democrats in terms of the next bailout package. That's obviously something that the equity market doesn't really like, as they really did hope that we seal another bailout package. But even that is now probably being pushed back into September, something the market might not like too much at this point in time. Last but not least, we have what looks like an escalation in the Mediterranean between Turkey and Greece. That is something that we have to watch very carefully. Obviously, the two sides have a lot of history in the last 50 to 100 years, and it just seems since Erdogan upped the ante, even threatening with potential war solution to solve the problem. That's obviously something that started to scare European equity markets today for the first time. Going into the weekend, it might just something that we have to keep a closer eye to it. But what I really want to talk about today was just the markets as we have seen it this week, with the first job being the Dow. The Dow has finally broken above 27,580. That was the sort of first recovery high of the lows in June. We haven't quite managed to break 28,170, which is the first low that we had end of January, early February, when the COVID situation appeared in China. That seems to be sort of now the top for the time being, especially with the fiscal package in the US not being ready in August. So 27,580, 28,170 for the time being. I still wouldn't be surprised for this to come off eventually, but you know, so far it's just pointless to talk about the leg down in equities at this point in time. The next slide is euro dollar. As I spoke, the first leg up obviously was this phase one of the summer market, very thin liquidity, a real dollar crack there on the downside and top side in the euro. Now, the last few weeks, we started to consolidate 117, 119. I think with the ADX, which is the black line you see on the indicators, showing that the move starts to lose some momentum. Obviously, I think we're going to see some more consolidation next 2-3 weeks. I still hope to see a dip to 116, 116.5 to start buying euro again for the next leg up to 125 that I expect later in the year. The DXY on the next slide, pretty similar picture. 92.55 has been hit about 3 times, so that seems to be quite a stable level there. I would still hope to see a correction to 94.20 if he was resistance, or even to the 94.65, the low from the March sell-off. That's a sort of area where I would be interested to start selling dollars again. But as I said, I think the consolidation could last 2-3 weeks from here. The next slide, gold, obviously a real shocking move on the downside. Finally, maybe the formal buying that we have seen in the last few weeks just taking its toll. Probably players that are not used to play gold on a normal sort of average week. They just got sort of sucked into what's being talked about in gold. And those were obviously the first position that just had to go when the correction started. And there was a lot of panic. So I would say the week longs are out. We almost sold off to the big trend of 2020, which comes in at 1860. Fundamentally, there's nothing wrong with gold. I still think eventually it might hit 2,400, 2,500 in the next few months. But in the short term, maybe just too many people really bailed into this trade at this point in time. The last slide, silver, obviously a very similar picture here. It catched up a lot on the gold move. That's why silver probably moved a little bit more intense than gold. But this is really a catch-up trade with gold. It's a sort of cheap gold, those that can't really trade gold playing silver. Obviously that makes it a little bit more volatile in that sense. This is it from me for this week. Thanks very much indeed. Bye bye.